Jim Cramer drops some nuggets of truth and optimism regarding not losing faith in the Nvidia stock, even if the earnings were not up to par or expectations. He begins with a story that starts on the morning of August 5th. The financial world woke up to a staggering shock. Japanese stocks, which had been steadfast and strong throughout the year, crashed a jaw-dropping 12%, the worst decline since the infamous 1987 crash. What made this scenario even more perplexing was that nothing seemed fundamentally wrong. This drop, primarily driven by a strengthening yen, forced investors who had borrowed yen to buy stocks to put up more capital, leading to worldwide margin calls. And within this all-encompassing plunge, the focal points included some of the mightiest names in tech, Nvidia and Apple. Throw in the fact that Warren Buffett sold nearly half of his Apple stake without uttering a word, and you have a market atmosphere laced with intrigue and uncertainty. Why these sudden moves? What insights lie beneath these seismic shifts? And why shouldn't you worry about Nvidia in particular? Let's delve in and find out. Hello everyone, and welcome back to Investocracy.
Who else deserves our trust? Well, how about Jensen Huang from Nvidia? For the last 5 days, we've had to hear about how major players like Amazon, Alphabet, and Meta are developing their own chips to decrease reliance on Nvidia, while Intel comes up with a competitive product. The news, let's put some quotes around that. The news has crushed Nvidia stock, creating a presumption that these key clients are moving to quickly distance themselves from the company and break Jensen Huang's stranglehold on the super GPUs. If only they could. Now, think back to when I last interviewed Jensen. I asked him directly about this competition multiple times because I knew it was coming. Each time he made several things very clear. One, these companies will remain great clients. Two, right now he simply can't give them everything they want purely because he can't produce enough chips to satisfy demand. And three, he's doing his best to help these clients develop these kinds of semiconductors. He can't understand what's the big deal. He comes in peace. Who's Jensen Huang? He's a visionary who's delivered on every promise and created $2.3 trillion colossus. Along the way, he's been doubted as if he were some sort of alchemist, a three-card mining dealer. Now, all I hear right now is that he's the man behind the AI bubble, as though this is the dot-com period all over again, 1999, maybe 2000. That kind of thinking has kept people from making fortunes in the stock of Nvidia. What the heck did Jensen and his team need to do to earn your trust? How much value does he need to bring out, to create, before people realize that doubting Nvidia has, in fact, been a very poor decision? He's not the con artist. You know who's the con artist? The bears are. Oh, and those claims that Intel's got the better chip? How dare they?
That clip was 4 months ago, and Jim Cramer emphasized how we should put our full trust in Nvidia and Jensen Huang, even at the most dire of times and during a storm of very negative headlines aiming to take down this technological empire. And if you did trust in Jim Cramer's words and put your faith in Nvidia, then you are perhaps on the precipice of something grand. But what if it isn't really? Well, going back a second and unpacking the mystery when markets turn as tumultuous as they did on August 5th, everyone wants answers. At first glance, the story of the Japanese market crash seemed to make little sense. The yen's sudden strength threw a wrench into the global financial machine, leading to ripple effects and worldwide margin calls. To make things more engaging, think of the stock market as a colossal casino. Sometimes, even when you think you've bet on a sure thing, the house always wins. But hold on. The real focus here isn't just the global effect of the yen's strength, but rather the seismic shifts seen in our beloved tech giants, Nvidia and Apple. European markets set the pace, and the US followed suit, plunging around 3%. The magnificent 7 megacaps, including Apple, Amazon, Alphabet, Meta Platforms, Microsoft, and Nvidia, didn't escape either. Apple and Nvidia took particularly hard hits, with Nvidia plummeting 6.4%, casting doubts on its place in the trillion-dollar market cap club. Even more concerning was Warren Buffett's quiet divestment of nearly half his Apple shares, a position he previously praised. If the Oracle of Omaha was stepping back, what did he know that the rest of us didn't? But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. That said, back to the video.
Let's now turn to the next big test for the markets, however. That's Nvidia earnings. They're coming up Wednesday after the bell. Bryn, coming to you. You own Nvidia.
Yeah, I mean, I don't think it's any surprise. It would be surprising if their numbers weren't great. I mean, you know, Jensen is a showman, but he's got the goods to back it up. I think they're going to have huge numbers. I mean, I've been saying this all along. If you listen to any of their earnings calls from the hyperscalers, what are they doing? they're increasing CapEx. They're continuing to spend. And we also heard from AMD. They had great numbers. And Lisa Su, I think, will confirm what Jensen Huang will say about the continued trajectory and the spend, whether it's from the VCs or the hyperscalers. I would not be surprised if they have a massive beat and guide higher. It would be, to me, shocking if they didn't.
All right, totally shocking. Josh, we were actually just here talking about this yesterday. You pointed out the incredible estimates when it comes to revenue, 112% year-over-year growth, EPS 125%. I was speaking to Dan Ives on my show, Worldwide Exchange, earlier today. He says NVIDIA not only has to meet those expectations, has to beat them and even raise guidance. Do you agree?
Yes, and I pointed out we're looking for 100% plus growth for revenue and 130 some odd percent growth for earnings. And it's not out of the question that they have an unbelievable quarter, but it's not 137, it's 132. And the market decides to whack 10% off of this stock. It's a high beta name, and it does have a lot of sensitivity in the short term. But the good news is Nvidia has reported now 6 straight quarters of sales and earnings per share beats, and they've raised guidance each time. So that's why the estimates are as lofty as they are. But this is a company that markets have been repeatedly waiting to make a misstep. If you've been betting against it after each of the last 6 quarters, you've been covering higher. It has not been fun. So look, that's what you're up against with this name. Stock is coming into next week about 9% off its highs. At its low during the recent volatility, it was down as much as 27%. That probably would have been a better time to start a new position than today, especially ahead of earnings. I don't know that that's something that I would want to do, but the stakes are high, I think, for the overall market. The last thing on this, if you listen to the conference calls, Microsoft, Meta, these are the biggest customers, and really what they say matters the most. The hyperscalers, none of them are pulling back on spending. Not one of them. And actually, Zuckerberg raised the bar. I think he's going to spend like another $40 billion or something. So that's good news if you're along in the name. Their top customers are not talking about anything other than full speed ahead, at least for now.
Turns out, Buffett's move sparked fiery debates, questioning whether the downturn in Japan was just a trigger for a larger intrinsic issue. Market sentiment dragged Nvidia from $107 per share to $98 over 2 brutal days, while Apple sank to $207 from $219. These declines created a sentiment that perhaps these tech titans were built on quicksand. Just weeks later, Apple rebounded to $226, leaving us wondering about its missing backbone. Could a strengthened yen and market panic alone account for these dramatic fluctuations? The press quickly leaned into the narrative of overvalued tech stocks and uncertain Federal Reserve interest rate decisions. However, the stakes for Nvidia this week couldn't be higher. The artificial intelligence chipmaker reports earnings after Wednesday's closing bell. Analyst Ben Reitzes from Melius Research has set an expectation for a massive $2 billion upside surprise in the reported quarter, coupled with an anticipated lift of $2 billion for the next quarter. To sweeten the pot, we're looking for Nvidia CFO Colette Kress to make an Apple-like announcement regarding a giant buyback, which could remind skittish investors that Nvidia isn't just smoke and mirrors.
By the way, you changing his last name. It's Jensen Nvidia. It's not Jensen Huang anymore. You just decided?
Look, this is...
You're making decisions. I want to get back to your note. According to your research, for every dollar spent on Nvidia chips, it kind of flows through to the rest of the tech sector to $8 to $10. What does that mean for some of these other stocks?
That's the most important thing. Because remember, it's not just about NVIDIA. It's about the multiplier. It's about the revolution, the $1 trillion of CapEx. For every dollar spent on an NVIDIA chip, there's an 8 to 10 multiplier across the rest of tech. That's why it's so important in terms of what NVIDIA says for this bull market to continue.
So you're saying it's a broad tailwind. It's not just it's a rising tide that's going to lift all boats.
Because it's not just
even in software, because software seems to be under pressure, or at least it was when it comes to this AI craze, and it seems like a lot of the money that was going to software has gone to chips.
But even next week, you'll hear from Benioff and Salesforce. What are they focused on? AI. Look at McDermott and ServiceNow. In other words, it's just starting now. The software wave is a second, third derivative. That's why I think we're seeing here a year from now, NASDAQ 20,000, and it continues because now the rest of this party, it is only 9 p.m. in the AI party
that goes to
that
when?
We believe it goes to 4 a.m.
To 4? Not to sunrise, but it stops at
4 a.m. And look, will there be times music stops and there's glass in the food? Yeah. But right now, what we hear next week, it shows this party, the music continues to play on.
But let's zoom out. Both Apple and Nvidia are undergoing seismic changes. Apple, trading at a lofty 31 times forward earnings, is silently transitioning from a hardware company to a software and subscription-based giant. This transformation is subtle, almost invisible, likened to Apple selling a high-end razor while third-party manufacturers supply the blades. Japanese strengthened yen or not, this shift is profound. Apple's partnership with Microsoft-backed OpenAI suggests a nuanced amalgamation where Apple could be pocketing revenue without directly producing the service. Nvidia stands in a league of its own with a forward PE ratio hitting nearly 39 times. Despite the market cap soaring to $3 trillion from $500 billion in January 2023, Nvidia remains partly misunderstood. Unlike a typical hardware company, Nvidia commands a substantial lead in both accelerated computing and generative AI waves. While many investors fail to see it, Nvidia possesses an unparalleled CUDA software platform, fundamental to the AI ecosystem. CEO Jensen Huang's foresight stretches back over a decade, paving a meticulously planned path for Nvidia's dominance. His vision materialized into a juggernaut that is ever poised to ride multiple growth waves. Even if Blackwell, Nvidia's anticipated next-gen chip platform, faces slight delays, no competitor is nipping at its heels. On that August Monday, the shockwaves that knocked Nvidia and Apple were temporary. What became apparent was not a lack of backbone in these stocks, but a reflection of market participants' fluctuating sentiments. As Nvidia gears up to unveil its earnings, the broader narrative extends beyond immediate results. The intrinsic forces propelling Apple and Nvidia are formidable, insusceptible to transient market worries or independent tactical moves by investors, even ones as influential as Warren Buffett. So what does all of this mean for Nvidia stock investors? The answer is easy. But before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
All right, I know tech is really your wheelhouse, but you look at the broader market as well. We're going to show a chart. This is the Mag 7 and the S&P equal weight since the start of this quarter. The equal weight outperforming the Mag 7. When it comes to that Mag 7 trade, how important are these earnings? We had our data team run the numbers. Implied volatility post-earnings, 10% up or down. What do you think this report does to that mega cap tech trade, that AI trade, et cetera?
They're the torchbearers of this rally that continues. And I think it's just the start. Look what's happened with Apple in terms of the new iPhone launch. The AI story will be led.
So NVIDIA stops the broadening? Because that's what we're seeing right now with equal weight. It's the broadening of the market. People are putting their money in other places, especially cyclicals, ahead of a cut. So you're saying that this report could actually change some of those flows?
Oh, I think it does. And I think ultimately tech will lead the market higher from a large cap perspective. We look into year end, and I think Mag 7 actually outperforms. But look, but again, many have been skeptical. The bears in hibernation mode, they've been negative on big tech for the last few years. But when it comes down to numbers, and it comes down to this revolution, this is a 1995, almost 1996 moment, but not a 1999 bubble moment.
Navigating the stormy waters. Given the turbulent market dynamics and the unsettling sell-off led by the yen's sudden strength, the episodes of August 5th serve as a profound reminder. Both Apple and Nvidia endured sharp declines but swiftly rebounded, highlighting a profound resilience. Apple, in its persistent transition to a service-oriented model, continues to harness an astounding valuation supported by unprecedented global scale. Nvidia, meanwhile, stands at the intersection of accelerated computing and AI development, uniquely advantaged with proprietary software and CUDA. As Nvidia prepares to disclose its quarterly results, the landscape appears promising, tethered by robust technological underpinnings rather than fleeting market sentiments. So keep your faith and trust in Nvidia, as Jim Cramer would love for you to be. And even if the earnings were not up to par, then know that the rebound will be stronger than anything the market will surely predict. Are you intrigued by the prospects that Nvidia's future holds? Curious about the tech behemoth and how it plans to keep its stratospheric trajectory? We'd love to hear your thoughts. Whether you're an ardent investor or simply fascinated by technological strides in AI, your perspective matters. Drop your comments and let the conversation flow. This is an unfolding narrative with potentially lucrative chapters still being written, and your opinion is part of this journey. Let's see where this exciting saga takes us next. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.